Good morning. Happy weekend. I hope everybody had a great, enjoyable weekend. Hope you enjoyed the Final Four on Saturday. Pretty exciting games, but no more exciting than watching Deerfield High School play baseball this week. So, anyways, as we do every Monday, we do recap and preview, and taking a look at last week's action. We had a week that after a big spike up on Tuesday, basically spent the rest of the week selling off. But I think it's important to take certain notes away from the action that we had last week. The first thing we want to look at is the Russell. The Russell was down about 4 or 5% last week in a trade. Now, as those of you who know me best know that that's my major indicator. What I really like to watch is the Russell, and that is now getting hammered. The Dow was stronger than any of the other indexes. That's another sign of things to come. The Dow is not going to lead the market higher. The market gets led higher by the NASDAQ, the Russell, and the S&P. It's another warning sign to take note of. Take a look at now how we are reacting to news. The news last week, each day we had news, whenever it was bad, the markets actually were under a little selling pressure. And when we take a look at last week's jobs number on Friday, a total disaster. Now, you take a look at that and you go, okay, the market sold off hard, but of course, on Friday morning, the markets hit their low somewhere around 9:30 Central Time or 10:30 Eastern Time, and then spent the rest of the day rallying, pushing up a nice charge late in the day to only finish off 40. But that's not the real story. As we've talked about often, we are seeing a lot of what we call the late money coming in here and buying the dip. We have the late fund managers coming here and buying. This is not healthy buying. When you see stocks like McDonald's, Johnson & Johnson, Verizon as your leaders, that is telling you that money is outflowing from higher risk assets, which means the likelihood of a continued rally here is not real likely. What you want to also look at is the move to the US dollar and the treasuries. The treasuries told you all week last week, and I wrote about this and I talked about it, telling us that the market was going to have a bad jobs number. So how does it all move out to this week? Well, we have to look at the action. The market itself has been making slightly lower highs since we took out the high mark. But what I really want you to notice, I want you to look at the Russell, because that's really been getting hammered. I want you to look at the tape or the stocks that are actually going higher here. We are not getting participation from groups. So looking forward to this week, I look for more of the same. I think we want to be in a sell the rally mode. Now, if you have a stock that's in a solid uptrend, we're not going to sell those stocks. We want to look to buy those on pullbacks. But any stock that is starting to show weakness and make lower highs, you want to sell up against the high. You want to sell at resistance. We looked at oil broke down. As we talked about, we were looking for that move. We talked about gold. So, looking forward, we'll see how this week plays out. But the exciting information is that it looks like we might see a little bit of action come back into the market, which is what we really need, because the market needs, for its own health and wealth, a slight correction. So this is going to be a pretty heavy news week. We'll talk about the news on Wednesday, but what I want you to focus on is the actual footprints of the chart that you're watching. It doesn't matter. The overall markets, I believe, are at the top. Whatever you're watching, make sure to check out the Average Joe call on Monday nights. Awesome call. If you want to know how to get on, email me at todd@averagejoeoptions.com. For Monday, the Bubba Show. Have a great day. We'll talk to you Tuesday.